today, so I think today will just be that continuation move further to the upside with the news candle. Therefore, I would look at, lower low, lower high, lower low after the sell-off with the 10 a.m. news, lower high, lower low, and then we shifted market structure right here. I've already marked that up on my group 1 analysis right in here, so I'm not going to do that again. Standard deviations ICT. 0.5, get rid of that. We can see that 4 standard deviations would take us above the previous week's high. So that would be the rough area where I would look for, to get out of the trade. Just using this as my, it's my scale of measurement of how oversold or how much we've moved already based on that final manipulation. What some people also started doing is using the, what's it called again? You might have seen that guy on Twitter doing this, measuring that final manipulation. Vietnam theory, I think. That's the low. Yeah, well, that doesn't really work here. Anyway, let's forget about that. Go to the 15-minute time frame. So on the 15-minute, we have that lowest down closing candle I saw. Move here to the upside. Get rid of 0.5. Yeah, that should be fine. So we see how we kept up holding support inside our hourly bullish / inversion fair value gap. This is our hourly bullish from over here. We ended up retracing a little bit deeper than expected and actually close below the hourly, but yeah, eventually we pushed to the upside. So let's see where we're at right now. This is the hourly volume imbalance. Paired with that hourly volume imbalance, we have equal low sell side on the 15. We have a nice big 15-minute fair value gap at 2 a.m. on that 2 a.m. candle. We have buy side above. Previous day's high above. We could simply just continue to push higher today. Let's see what all that's looking like on the 5-minute now. Let me hide hourly analysis. Put that into the hourly analysis and previous day's high. Where are you at? Those two also goes in here. Group 1. So those were my 2 trades yesterday after we ended up the live stream. I took this trade right here, like we said on the live stream, using bearish fair value gaps to continue lower, and I obviously did the same thing right here. Stop loss above this candle's high, 1 tick, so a 5-point stop loss here really. Targeting more sell side for a 1.5 risk to reward. Stopped out on that one, and seeing how the candle closed above that lowest bearish fair value gap, I immediately entered into a long position on this candle close and then added to the position on the breaker block right here after the market structure shift has been confirmed, paired with the bullish fair value gap right here, paired with the volume imbalance. Then I wanted to see, price keep on pushing. I used the VWAP in the end of the day as my exit, 1.7 risk to reward. Obviously, we could have let it run for even 20 points, but I thought the VWAP is a good point to get out also because right here at 11:55 we opened up a new hourly candle, leaving behind this hourly bearish fair value gap right over here. Where are we at? This hourly bearish fair value gap, so I didn't want to hold through this entire bearish fair value gap on the hourly. Decided to get out at the VWAP. Eventually we pushed above the VWAP, and then here at 12:20 we made sure that we clear all stops that have been placed below the VWAP and eventually just continue to push. This could have been a good re-entry. Stops taken, using that highest inversion fair value gap to pick up some steam to continue to push through this bearish fair value gap. Once we closed above, I started to add longs again. One long right here, one long on this bullish fair value gap, and one long right here. Took a partial once we went back above this high. Then we reversed, took out the short-term low. So at this point in time, I was really cautious. My stop loss was just below the VWAP. I wanted to see this being a stop hunt right here instead of a actual reversal. It had the potential because this theoretically is a bearish market structure shift. But already that next 5-minute candle pushed back above my entry price right here of this bullish fair value gap. Consolidated, no bearish fair value gaps in this price leg either. So I kept on holding, watched 1 minute time frame, and everything looked like this was just a final manipulation before actually taking it into London session buy side liquidity right here, this equal high buy side, and the regular trading hours opening gap right here. We see that. We almost filled that into the tick. And this was my final target right here, the high of this bearish value gap if we go back to the electronic trading hours. And once we saw good confirmation that we actually gonna push out of this inversion fair value gap, bullish fair value gap area, I added another trade with my stop loss just below the low of this candle, targeting this buy side liquidity. Afterwards, we failed to hold. This could have been another continuation entry, even this bullish fair value gap, to target the short-term low right here for a quick scalp, retraced, holding resistance on this bearish fair value gap, initially closing above, but immediately volume imbalancing inside of the bearish fair value gap right here, and then continuing lower, leaving behind a new bearish fair value gap, overlapping with a inversion fair value gap to target that very late continuation drop into equal low sell side right here. This is basically the recap of the AM session after we started streaming here at 9:15, consolidating prior to the news candle. News release came in. The volume imbalance, we already spoke about it, would have been your only chance to get in on the 5-minute time frame, or simply by using any of the 1-minute inefficiencies that have been left behind, because we respected them beautifully. First opportunity that was presented to us was using this bearish fair value gap to target further sell side continuation, which we actually took on stream. And afterwards, you would have had one losing trade if you would have simply continued to look for that continuation. But immediately afterwards, you could have taken on trades on that reversal manipulation, reversal distribution. Where we at right now? Let's hide all that actually. If there are any questions about that, feel free to ask. London opened up. 1 hour. London stream, yeah. I thought it's easier this morning instead of writing everything. So 1 hour bullish volume imbalance. So far kept holding nice support here, but at the same time it's also a nice target. I mean, all these equal lows right here. Sell side liquidity. Sell side safe. Yes, okay. We opened up right here, went below the Vivo, and from here on we ended up holding nice support here. Trend during the Asia session, higher high, higher low, equal low, higher high, equal low, higher high. Now we have all these inefficiencies here, unfilled since 2 a.m. the 8:30 open, we can get rid of this line for now. For the early morning, regular trading hours, opening gap, daily opening, standard deviations. In terms of buy side liquidity, would just pick the highs of the PM session drop right here. As buy side, previous day's high is already marked up right here with this orange line. Those would be our buy side targets in close proximity. Make this 11, modify the template. Buy side. Buy side, let's see if we can find a last and final manipulation move here. Really? Kind of tough. We could use this one right here to look for potential standard deviation targets. While we're continuing to the upside, I want to mark up the bullish value gaps that so far ended up holding support. And I want to check how much room we would actually have if we were to close below this, let's say at 68. To the mid, 1 point, 2.5 points, 4 points. This could be a nice trap, 2 AM pump above a short-term high. Fail to hold the highest bullish value gap, retrace all the way back to the VWAP, take out these equal lows, and then still continue up higher. But yeah, I don't know if it's worth the risk. There's not a lot of meat on this trade, only if we would get in at 4969. We could actually secure 5 points here. Let's check out this bearish value gap. We close above at once, but immediately volume imbalance lower. So this is a good area of resistance for now before we hit buy side. Bearish value gap. And then afterwards we're going to be looking at this one. Is it the same thing here? We close above, but immediately volume imbalance back below it. Let's see what that would look like. If is that too big? Yeah. All right, I think we're done with the markup for AES. We've got all the important fair value gaps on the chart. Sell side liquidity. Let's also put Asia sell side on here. Actually lines up pretty nicely for standard deviations into PM session buy side here from yesterday. Just by looking at that only move really we have to the downside, we take sell side. After taking that sell side, that short-term low here, not this low for whatever reason, we immediately pushed away from it, leaving behind bullish value gaps. And that's really when that, when bullish order flow started to kick in, bouncing off the VWAP, continuing higher, leaving these equal lows behind, continuing higher. So same way as we looked at this as a potential measurement, we look at that last manipulation. Ideally, that's located at the low or high of the day. To have a feeling when it's worth to look for long continuations into a specific target, or if we're already overextended on the... Oh, sorry guys. Still a little bit tired early in the morning. So right now we're playing around 2.5 standard deviations. My max target for one run to the upside would be 4. 6, 9, 7, 7. That's almost 10 points. Let's see how we close here and take a quick look at NQ and see what NQ is up to. NQ almost took out Friday's high. We could do the same thing here. Let's get rid of all these drawings. Done. Where's this line coming from? Doesn't matter. Previous day's high. Let's hide the ICT all-in-one and see if we can use the standard deviations here on NQ as well. Looking for that final manipulation move in terms of standard deviations. 2 standard deviations would already take us above that high, potentially see 1800 just based on this measurement. We could look at prior examples right here. We look for the final manipulation, low, lower high. For standard deviations, we go a little bit above it, but eventually that's around the area where we top out. See if we can find another example. Nah, here it would be kind of tough. Doesn't matter. We focus on today. So let's see where we're actually at. We already went above Monday's high. That's lining up with ES, Monday's high right here. So there's no SMT divergence here. That's the only thing I really use NQ for. And that's that high. We're already above that on NQ. We actually pushed above it prior to the midnight open. And we went above that. We didn't do that on ES. NQ electronic trading hours price 17. 774. 0.25. Previous week's high. Save. Both are retracing now into the inefficiencies. Not really a fan of blindly buying into those inefficiencies, even though it would be, I don't know, the only setup that presents itself as of right now. Scaling in. I don't like the amount of time we spend right here going sideways. That usually leads to a collapse, trapping longs, max amount of pain, and then continue higher. Of course, I could be wrong and we just consolidate here and take that next leg up higher. NQ has been on a run this morning, that's for sure. 4 standard deviations of that last only really down move here, the lowest down move to the downside. 4 standard deviations almost perfectly line up with that previous week's high. Could be a good target. Mm, 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 mm. Let me actually check out the chat now. There are no questions, unfortunately. Opening up with a bullish volume imbalance. What's the time? It's 3:15. 15-minute time frame. Still respecting this 15-minute. Having retraced. Yeah, I'm not really sure. Don't really feel super confident, but we can try getting in on this volume imbalance. Placing our stop loss below this low. Target buy side or simply 5 points at 975. Yeah, let's do this. Not gonna take that on the funding pips account. No activation fee. Yeah, that's cool. Yeah, I've heard of my funded futures. That's pretty cool. No activation fee, actually. I never used them. They approached me to $90 for a 50K. Yeah, that's pretty much the exact same deal. Never really took a good look at the company. Wait for something between 4 and 5 a.m. MFFU. I don't like the owner, Matt L, on Twitter. But it doesn't have to mean anything. Up to 600K. Get 20% off, no activation fees on starter, and 25 of expert resets for a limited time. Oh, they have expert account reset. Hang on. I've traded with their CFD funding firm before, my funded FX. Starter, no, they low, max, okay. Let's check it out. So for the starter, 50K account, 100 a month, so $80. Profit target 3,000. Max position 5 contracts. No daily loss limit. That's good. Drawdown mode end of day, but still trailing 2,000. Activation fee 150. Reset fee 100. Scaling rule, yes. So I think that's very similar to take profit trader without the daily loss limit. Yeah, those future funding firms, they're not so much different from each other. say, yeah, it's always a good idea to sign up with multiple in case one of them goes down and you don't lose all your funding like I did back in the day with my with my forex funds. Especially if you're at that stage and you don't really mind that trailing drawdown, even if it's end of day. I mean, it still hits you if you, I don't know, you trade usually with one mini contract, you take two losing trades with 5 points stop loss each. That's already, you're already down 500, and heading into the next day, only left with 1,500, and because you're on a losing streak, I don't know, or because you lost yesterday, carrying over the emotional baggage, you lose another 500, or you might, I don't know, revenge trade and enter with two contracts instead of your typical one contract, and you lose $1,000. Well, at that point, it's almost time to, yeah, bin the challenge. And let's look at the 100K account, $6,000 target. That's what I think is fucked up. Here for the 50K account, you have $2,000. Basically, it would be the same as if you deposit 2 grand into a futures account. In my opinion, when it comes to futures, you're much, much better off if you actually just take the money out of your bank account if you have 2 grand or 5 grand laying around doing nothing, and then put that into a futures account and actually, yeah, play with micros. You're not gonna burn, but you also don't have to worry about a profit target, your trailing max drawdown, and all that stuff all the time. And yeah, theoretically, this is doubling your account. So by the time you would have deposited $2,000 on your real futures account, you would have actually doubled it. While at the same time, I know it's about leverage and all that stuff, because here you get access to $2,000 by only paying $80 with the current discount. Same with Apex, even less sometimes with the 71% or 90% discount. But I think you know what I mean. This is almost, yeah, more than 100% gain on account if this would be your own $2,000 account. And you would be able to, yeah, risk less, and actually when you make profit, it's already yours without having to worry about targets. And I think that 100K account where you have a $6,000 target, but you only get a $1,000 increase in your trailing max drawdown, so twice the account size in simulated dollars, but only 50% more trailing drawdown. 50K accounts are always the best ones for futures. Let's go back to our trade, check out NQ. Seeming to push back to the upside. Yeah, I'm still not making any progress on my challenge. Well, I would say it would be much easier if you try out a CFD challenge, because you just have more room to breathe instead of a 4% max drawdown. You get a 10% non-trailing max drawdown, which really helps a lot if you think about it. So if you ever end up losing some, which is simply part of it, it's not the end of the world. On that next trading day, you just keep on doing what you have been doing on that day before without lowering your risk to avoid losing the challenge. If you use 0.5% risk, I mean, you can potentially lose 20 trades in a row, and that's really, really unlikely. It would have to be a bad system. Those future challenges, yeah, they have to really align with your strategy. Otherwise, it's just too much work trying to, and too much effort trying to, pass the challenges. Unless you take a one-shot, one-kill trade where you, risk basically the entire account on one single trade. Or to pass those, that's what I did for the Apex challenges eventually at some point in time. Or it just takes forever because you have your profit target, which is bigger than your max trading drawdown. And once you make profit, you're actually not getting further away from your max drawdown. So that's my biggest issue right now with funding pips. I'm up 5% out of 8% target. But my trailing drawdown or my max drawdown isn't moving up as I'm making profit. That's the cool thing. So even if I lose those 5%, it just ends up being a restart basically. I start again from my initial account balance. But theoretically right now I could lose 15% on both accounts before I lose the challenge. That's, in my opinion, the biggest difference between futures and CFD challenges. So you have a profit target that's smaller than your overall loss limit. Compared to futures, you don't have that. And your trailing drawdown, which isn't moving up with you. End of day is doable. But yeah, you also have to be, let's simply say you have to be much more disciplined and much more onto your risk management approach. You simply cannot allow revenge trades or, not following your rules and taking more trades than anticipated with future funded accounts. You have to be really, really strict. If you lose 500, you just have to stop. Otherwise, I don't know, if you keep on losing, you only have 50% of your margin left. And I know it's much easier to over leverage based on your account size. You only have $2,000 margin available. If that's gone, your challenge is gone, compared to, 10% margin. More than 2.2 times as much compared to the CFD challenge. Still consolidating here on BS, so not really interested. Yeah, especially when Apex had the 90% discounts, that's what I did. I bought 10 Apex accounts and went long on 5 for a pretty good setup, and then you have 5 Apex accounts pass basically within one trade very efficiently. You can also go long on 5 and short on the other 5. Only thing you have to make sure of that is if you're in profit and it goes back to break even, you actually blow the challenge. That live trading drawdown is the only obstacle, and then afterwards you only do 5 days or 6 days of micro executions, and after the 7th day you get asked to pay the activation fee. And then, of course you could simply do the same thing again, but therefore you need, let's say, a little bit more free capital to actually, at that point you already spend 150 USD on the activation fee, so it's a little bit more expensive to do this one shot, one kill to get to the payout stage. And they also implemented a rule against that practice, basically, because in order to qualify for a payout, your biggest win can't be more than 30% of your overall profit. So let's say I'm reaching the $3,000 payout threshold and I've done $2,000 within one single trade. Well, 2,000 of my total payout request, 3,000 is much more than 30%. Basically means that if you get to $3,000, your biggest single winning trade or winning day can't be larger than $1,000 roughly to land at 30%. And yeah, there's no such thing with take profit trader or my funded futures, if I read that all correctly. So I think that's a advantage, because as you take payouts with take profit trader, I actually just recently requested a Apex payout. Not sure where it is in my emails. It's doable, definitely, but it's much, much, much harder and much, much, much more work compared to a CFD challenge with funding pips in my eyes, having done both. All right, stopped out here. Still didn't close below the highest bullish fair value gap. Could have been potential invalidation. No SMT divergences at the high. We didn't make a higher high on NQ. We also didn't make a higher high on ES. But we're starting to break down. But like I said, I don't think there's enough room to the downside. Even if we close below here, we could try a short into the sell side liquidity, and that would be barely 4 points, depending on where we close. If we already close below the midnight, no, I'm not looking for continuation shorts. yeah, Bongo Rambo, I experimented with that after a while. You kind of, I think with Apex, you reach that point where you really view at trading a Apex challenge for $15 as a waste of time if you take an entire month to pass the challenge. And with a little bit of capital or free capital to actually play the prop firm game, it's a game. We cannot deny that. And you can use those rules against the firm to speed up the process. But with Apex and 30% consistency rule, after you progress to your PA account, it's more difficult to simply take one big winning trade and immediately request a payout. You could do that with take profit trader. That's the cool thing. And request up to 5 payouts per week on a daily basis. That's what I really like about TPT. Not sure how MFFU is doing that. Never looked into it. But I can imagine they either use the Apex approach or TPT approach. There's not much innovation happening in that space. Yeah, I also really like that, having that wallet. Still not much happening. I'm glad I didn't engage so far. Now we have SMT divergence at the lows. If you look closely at that. Yes, made a lower low, while NQ didn't make that lower low. That same lower low. Pretty boring start, but I mean, it's okay. Can't always. I prefer boring over lots of fake outs and chop and manipulation. Yesterday's London session was better, I think. I mean, even though all we did essentially was chop around, taking two losing trades right here at the get-go. Initially, let's go over and open up my trades. First shot right here, prior to the 3 a.m. open or with the 3 a.m. open and this bearish value gap. Immediately close the position once we close back above VWAP and the bearish value gap, actually taking on the long right here on the candle close and on the fair value gap, targeting higher prices, and basically buy side also didn't happen. So I lost right out at the get-go right here. Once we closed below this bearish value gap, I actually jumped in on the short, targeting that Asia low, almost recovering, yeah, at least a good portion of. Here I also have been slipped and didn't put my safety stop into MT5, so this was an issue here. That's why I lost a little bit more than anticipated. But yeah, well, after those two trades, I already made it back. I entered short right with the candle close below the bearish value gap and added to the position once we retraced into the bearish value gap here at 415 on this candle right there. Took Asia lows, immediately turned around, closing above the lowest bearish value gap. So I entered long right here and on the retracement again with this bullish volume imbalance, targeting that equal high buyer side, getting out right here. That point back in profit, did some other work on the computer, and before I went to the gym I saw the setup where we retraced into this bullish value gap right here, holding support, not blindly buying inside a bullish value gap outside of my kill zones. I wait for the confirmation that we actually use it as support and move away from it. Even though if it lowers my risk to reward ratio, I'm still very happy taking a simple high probability 1-to-1 risk to reward into 1, 2, 3, 4 equal high buy side liquidity. Afterwards we did 1 push, 2 push, 3 pushes, but without actually making higher highs, just consolidating up here, eventually closing. Being at the gym at that time, that's why it's in a different color. Eventually closing below the highest bullish fair value gap on this candle right here, using it as resistance, and then heading lower into sell side midnight level for a quick and simple 2-to-1. Then I got chopped around prior to the news, didn't check the news calendar or focused on the 2 degrees news calendar, which didn't display the news, I think. So I lost a little bit here, missed out or didn't engage on this short opportunity, got in on that one, and then short right here, and then eventually that long right up into the highs and the regular trading hours gap fill. But yeah, yesterday's London session, even though all we did was chop high low, from low back to the high, we still were able to use fair value gaps, inversion fair value gaps and all that stuff in order to catch the lows and get out at the highs. No, we close below the first bullish fair value gap. Let's actually see if we can target lower prices. We're not really getting involved with price. I accept the risk. Let's do 2.5 points. Back above this bearish fair value gap as our stop loss. But we can already see there's now we're pushing through the next bullish fair value gap, volume imbalance, midnight level, and the VWAP. Even if we target the VWAP, that would be a one-to-one trade if we retrace all the way. But too much resistance in my eyes. For me, it really looks similar to what we did yesterday, right? Here we take out buy side and then we go sideways slowly, but eventually we collapse and hunt that Asia session low. And I think right now it's starting to look very similar. We have this pump up, we don't continue higher, which most of the time is already that short confirmation. Good morning, Omar. Yeah, spontaneous little surprise. This would really be the final target, this equal low sell side. Simply by, following the flow, seeing the first candle close below our highest bullish fair value gap, see how strongly we can push. It's 340, so that next candle opening is also going to be a new 15-minute candle opening. Now we've retraced into our, into the lower quarter of our 15-minute bullish. We pushed to the upside, but never really continued anywhere. And now we actually use lower time frame to capitalize on that short. But I want to see what we do around the VWAP, that new 15-minute candle opening. can help pushing through that and eventually taking out that equal low sell side. Take a look at NQ. NQ is not looking very weak right now, just below buy side liquidity as well. While ES is already playing around the midnight level and the lowest bullish share value gap of all these bullish share value gaps here to the upside. So if I would have entered on my funding pips account, that's what it would have looked like, simply targeting a 1-to-1 with 0.5% risk. But even then, I don't know, I didn't really like it. I knew it, chances of it happening were high, but yeah, I don't know. I prefer leaving it on my chart as a trade that I didn't engage on. I mean, we took it here on the live stream. Did anyone actually go short here? I mean, this would be a good partial point, 1-to-1, and then maybe leave it running until 1.6 into equal low sell side, and then see if we can hit a 2-to-1 as well. Below that equal low sell side liquidity pool. But after we take this sell side, I would anticipate some sort of a, so we take that sell side, retracement from a potential right shoulder and then continue lower. That's scenario number one. Or we take sell side and trap traders short, looking for lower prices so that those traders are trapped now below the slow and right around here. And then we do something similar that we did yesterday after 11 a.m. and slowly but surely push to the upside, close above this potential bearish share value gap, hold support, continue to push higher, and then take out buy side. I think that's based on what we're gonna see here on NQ. If NQ wants to take out this buy side liquidity right here at 17,775, or if we're gonna form a London session top before coming back to it during the New York kill zone. But it's much easier to actually, that's something that changed for me, to get in on the current price leg than waiting for the retracement into a inefficiency on the next price leg, because I think I explained that before. If we get in right here on that first confirmation that, okay, we're not respecting bullish order flow right now, why should we keep on doing it? We have targets to the downside, equal low sell side, VWAP, midnight opening level, but we didn't engage because there's not enough potential or room to the actual downside. Immediately rebalance this candle if we keep on pushing. But the main idea is that instead of waiting and watching for this drop to happen and then potentially getting in on the retracement for the continuation lower, I stopped doing that because at this point in time we already shifted to bullish order flow. Of course that could change and we continue lower, but yeah, I don't like taking shorts within bullish order flow and we start to disrespect the first bearish share value gap, then could potentially end up using as support, push higher, hold support on that next inversion fair value gap, and slowly but surely creep our way back to the upside until we hit buy side liquidity. It's much easier to actually take the scalp while price is already in bearish order flow into a good sell side objective or buy side objective, vice versa. Because most recently we often didn't get the opportunity to immediately get in on the retracement. Sometimes price is just running away. Like for example, what would be a good example? Right here, okay, we retraced into the inefficiency, but at this point in time we're still in that bearish order flow heading into Asia sell side. Same thing right here. If you would have waited for the retracement that we got right here. Of course, eventually it would have worked out, but yeah, I don't know, not my favorite setup, seeing it actually closing above prior to the New York Open with equal high buy side above. That's actually when I entered a small long position here to target those equal highs with the New York Open pump, and then look for the reversal to the downside. But that didn't really work out nicely. But I hope you know what I mean here. Nice reaction here. We closed below this bullish fair value gap, so we view this as a inversion fair value gap. Same goes for this one. Now we retested this inversion fair value gap and smacked to the downside. Nice pin bar candle. Still closing below the midnight level. Not leaving behind a bearish fair value gap on this price leg. Let's actually get rid of this line. So the next area we have to push is the VWAP. In order to continue lower, let's take a look at NQ. NQ would be, yeah, I think on NQ I would have taken a short if I were to trade NQ, because yeah, there's just more room to the downside until we hit the VWAP compared to AS at this point in time. It's not really worth it for me to take those kind of super scalps on the Funding Pips account unless I use the risk manager and really enter here with 4 or 5 lots in order for me to actually risk 0.5% if we move $2.50 to the upside, and then look for that 1-to-1 risk to reward right here at the low of this bullish fair value gap. But right now I prefer entering manually, usually with 1 lot per 50k in account size on average, and do it manually from my phone. And if I do that, entering with 1 lot here, I would be up $20 or something like that right now. Nothing significant. I tried using the risk manager. It works during London, doesn't work really nice with all the quick and sudden movements we typically see during the New York session. That's why I switched back to my phone for London. Yeah, that's totally plausible, because price is moving much slower with much less volatility. Just taking my notes. This London session. And our 1-to-1 profit target would have been hit. At this point in time, we could trail our stop loss. Let's see if we manage to close below this bullish value gap. That would be nice confirmation. Could be looking for a potential retracement. We don't have any bearish value gaps on this price leg. See if we can hit that, while at the same time filling out my journal. Sixth of February. So just as anticipated, well, our one-to-one would have been hit, most certainly, even with the spread. But we got a reaction of the VWAP. Still holding below the midnight level, open up with a bullish volume imbalance. Could see us potentially holding support on this bullish value gap, but I don't simply see the scenario where we don't take out these Asia equal lows. NQ tapped into the lowest bullish. I'm going to be waiting for, okay, that's 355, so that next candle is going to be a new hourly opening. I would prefer it to hit the sell side with the new hourly candle and then give us some good confirmation that we're going to reverse back to the upside. This would be my trade idea for the Funding Pips account. So basically looking for a manipulation lower with that new hourly opening, and then potentially, trying to catch the low of the new hourly candle into short-term highs right here and equal high buy side and more buy side from yesterday. So last minute of this hourly candle. But we can really see how simple it was by, initially trying the long, waiting for that highest bullish value gap to be invalidated. Then we immediately jumped on the short. 4 points is 4 points. No one can take that away. Would even be a 1.6 risk reward once we hit that. But yeah, well, I guess that was just me being a little bit too hesitant to engage again on the Funding Pips account. Really my mistake here. Would have been a good setup. Let's actually mark that up and didn't engage on FP. So now we closed below this bullish fair value gap. We could look forward for a retest before we hit that sell side, or we immediately hit our take profit target. Just what I'm doing here is journaling my thoughts, but instead of doing it on a journaling software, just doing it right up on the chart and all the trades that I take, do not take, my reasoning why with a little bit of text, and then simply storing it in here, and then I can recap it at the weekend and see what I can improve going into the next week. All right, so inversion fair value gap. Now we're retesting the VWAP from the downside. This would be a super scalp into sell side liquidity. After that, I would be a little bit more careful. NQ still not showing that same type of weakness. Still above the VWAP, still above the midnight level, still above this short-term low or higher low. I mean, NQ really has been putting in these higher lows and higher highs. We could look forward for that to change and retrace towards 50% of our daily range. Let's just see. I'm gonna go to the toilet quickly. Be back in no time. Alright, new hourly candle. Initially pushing back inside of the range. Couple of fair value gaps we could reject from here. We could also be saving the sell side liquidity for the continuation move. We'll see. Alright, back to the midnight level. Let's see if we can add one here for the continuation lower. Or if we might not even get into the sell side liquidity. So let's see if this candle can push back above this inversion fair value gap. That's what kind of invalidated for me. So now we're in with two contracts. My stop loss, well, one of them would be up here. And the other one getting in on midnight, 6675, 6875. Be right here, taking profit. One right here, and the other one at the Asia session low. This is paper trading, by the way. That's why you see TPSL buttons right here. Hmm. $15-minute time frame. We also closed below the 15-minute bullish fair value gap. Interesting. Holding support on the 15-minute volume imbalance. Well, I'd say this would be more of a retracement and we still head into sell side first. But seeing the initial move of the new hourly candle being to the upside, this would lead me to believe that for the rest of this hourly candle, we actually gonna continue lower. Just gut feeling. And actually develop the head and shoulders setup right here before we take out sell side liquidity. Or I'm completely wrong on this and we close back above the midnight, close back above this inversion fair value gap, and actually continue higher into buy side. This being a simple retracement without taking major sell side liquidity. Just don't really think that's plausible, but yeah, well, sometimes prices, yeah, doing that kind of stuff where it, yeah, looks like it's gonna take sell side, but it's never actually taking it. I mean, the majority of the volume likely has been trapped. If we look at the 20 AM range right now, well, let's say London volume likely trapped up here, where we spent the most amount of time going sideways. Right now we're back to the volume point of control. Let's see. Personally, I would favor longs more than I would favor shorts, simply given on the SPY side liquidity here on NQ. NQ not showing that overall weakness, not closing below the lowest fair value gaps here, still holding the midnight and that previous day's high. So let's see. Yeah, exactly. That's why I would favor longs more on ES. That's why I also didn't engage on the short. If anything, like I put it in here into my trade history, a simple 1-to-1 risk to reward, like we talked about, 0.5% risk. Stop above the high. If we would have immediately seen price pushing back up, closing above the bearish fair value gap we used as an entry opportunity, well, we could have closed the trade out at 0.25% drawdown, so basically at the 50% mark instead of waiting for our stop to get hit, because that's not what we anticipate getting in onto the short. I anticipate straight continuation lower. Retest the midnight level, close above, but immediately volume imbalance back below. If we look at the 1 minute time frame, we're still respecting the lowest bearish fair value gap. Let's see, still respecting the overall inversion fair value gap. Use the entire inversion fair value gap to continue lower. Let's see. NQ now also formed a lower low, tapped the midnight level, and got really close to the VWAP. Right now, just looking at this low right here and the current candle that's forming, we have potential SMT divergence at the lows, bullish SMT divergence. Yeah, because ES already has been at those levels, and NQ hasn't tested the VWAP / midnight open. But this could change very quickly as we continue into the sell side target. Oh, that's actually looking decent. Waiting for this gap to fill. I'm gonna get out of the short. Nice bounce we had right here. Lowest bullish value gap, so this confirms that bullish order flow to me, but I want to see this volume imbalance being tapped first before I hit the funding pips buy button. Closing back above the midnight, opening with that bullish volume imbalance, of course, could just end up being consolidation before we get that final drop, but I'm already eyeing a potential long setup. I don't know, it's my gut feeling. I started really listening and noticing my gut feeling. I've been looking for, something long during the morning. Of course, I could be completely wrong about it, but that's what risk management is for. Now we have the SMT divergence at the lows. We're bouncing off a relatively good area, closing back above the midnight, rejecting from the VWAP. 1 minute time frame, we see hints of bullish order flow right here. Lower high, lower low, higher high, market structure shift, lower low, holding support on that lowest bullish fair value gap, pushing back above the high to potentially run out some more highs with equal high buy side and buy side just above. Yeah, let's see how that develops. Invalidation for me, my safety stop loss is going to be placed below this candle's low. Volume imbalance right here. And that first sign that I want to see within the next 1 or 2 candles would be to close back above this inversion fair value gap. And ideally for this volume imbalance to remain open, hold support above the midnight level and then continue higher. Hmm. 50 seconds to go. Getting some sort of a rejection here. Let's see what that looks like on the 1 minute time frame. We took out that next high. Still with a unfilled volume imbalance right here. Yeah, let's see. Let's manage it actively. No, not really. Being afraid only. Well, I know it's definitely a possibility, as I mentioned a couple of times. We could form that head and shoulder setup here. I'm not risking my entire account on this trade, and I have a good conviction that we might not even have to take out that sell side before we head into buy side. And if I see invalidation or stuff that I wouldn't anticipate being in this long, I would simply get out. Yeah, that's really how I look at it. So now I'm not really afraid of price not having taken this sell side. I'm just a little bit more cautious, you could say. I would have preferred that, but I don't need that sell side to be taken, if you know what I mean. I'm still extra cautious now, even being in that long of the potential head and shoulder setup into our neckline right here. So with the first close back below the 50% of this inversion fair value gap now having closed back above it, not holding support on this volume imbalance, not holding support on the VWAP, that would be my exit. And I mean, that's barely any risk if I do not wait for my full stop loss right here. It's not even here, it's actually 2 points, if not, yeah, 2.5 points really. That's what I typically use, just to give it some room also with the spread. Barely do any harm to my account if I have my early invalidation signs. What I'm not looking forward to see right now, in my mind, I want to see this volume imbalance / bullish fair value gap, which has been changed from a inversion fair value gap after obviously not holding support with the close above here, to be used as support again to push back through the inversions and potentially take out equal high buy side. That's what I'm looking for. If I do not see that happening. I think exactly the opposite is going to happen. And I would still be able to engage quick enough on a potential short. But right now the flow isn't telling me that it wants to continue lower and trading the flow. I'm up for that. To, yeah, actually go long without having taken that sell side. Volume point of control looking nice, aligned with the midnight level. Let's open up the trades folder and mark this out as simple one-to-one continuation. Didn't engage here because I didn't have MT5 open for the simple 1-to-1, 2.5 points and done. This is a 15-minute bearish fair value gap that we're tapping into, that we tapped into twice now. So I'm also aware of that. 50% of the previous hourly range. This is actually a good little point of interest right here. Let me mark this out so it's won't get forgotten. 5-minute time frame. Here on the 1 minute, I'm really looking for this unfilled volume imbalance to be filled and hold support to keep on going with the short-term bullish order flow. Same way as we use bearish order flow and bearish fair value gaps to continue lower. Now it's that crucial time where I want to see support. We have 14 seconds left. I want to see that push back up. 1 minute time frame. So already seeing this, we didn't hold support on a volume imbalance, knowing where we rejected from, knowing what sell side we have below, knowing that we close back below the midnight level. I'm out with 50% of this long position. That's not what I looked forward to see on that next candle. I looked forward for that, yeah, basically straight momentum continuation further to the upside. Right now everything is indicating lower prices, so I'm actually out of the long with 50%. Rest is, well, I'm gonna wait for this candle right here, 425 and potentially 430. Being on the short side right now seems like the right thing to be in. And if you wonder how I manage that risk, right now I'm down 40 bucks on a 50k account. So like said, this is barely any risk, and well, knowing that we could form this head and shoulder setup, I mean, we formed a high potentially at the exact same price on the left side, here also on the right side. I'm gonna view it on the 1 minute time frame to see. Yeah, we already stopped holding support on this unfilled volume imbalance, but it's also not worth it to jump in on the short. There's barely any meat. Could be, of course, with that, yeah, first 30 minutes of this new hourly candle forming the retracement, and then we get the continuation almost all the way into the Asia session low. Like I said, I'm going to follow the 1 minute time frame and see if bullish order flow wants to continue. If not, well, I think then it's really obvious. Already seeing that we didn't hold support here. Closing below, retesting it, closing below it again. Let's wait for this 1 minute candle to close. We still have to weave up to potentially hold, but that's why I'm not out with the entire position yet. Then I want to see what's going to happen within these 1 minute time frame fair value gaps. If I see now that we fill them and reject from them, forming a lower low, that's going to be my full exit. Already got my MT5 open on my phone, waiting for confirmation. Right now inside this bearish value gap on the 1 minute, here on the 5 minute. Smack back down. This would be that early sign for bearish order flow continuation into equal low sell side. Out with 50% minimal risk. Unfilled volume imbalance at the low. Come on. It's almost destined to go back into this area now. Because we always come back to fill them in eventually. Unfilled volume imbalance, bump. Unfilled volume imbalance, we come back. Unfilled volume imbalance, eventually we're gonna come back to it. But we tend to get more of those during London. 5 minute time frame. New 5 minute candle opened up with a bearish gap to the downside inside our volume imbalance. Like we said, we still have to push through both of these bearish fair value gaps. We just filled in the lowest one yet. With this unfilled volume imbalance, not the biggest fan. Just seeing how precise we can actually be here. Tapped the highest bearish fair value gap. Now we filled this volume imbalance. Close below here, gonna be my full exit. Just like we talked about it. But if I see this volume imbalance being filled in and we push immediately back to the upside, close call, but yeah, I mean, this is bearish order flow at its best. Back to the VWAP. Let's take a quick look at NQ. Also looking like it want to continue lower. 5 minute time frame here on ES. Close below the volume imbalance and then used it like a fair value gap or inefficiency. And actually reject from it, open up with the gap, continuing lower. 10 seconds to go on this 1 minute candle. Ready to close the remaining 50%. Leaving behind a new bearish fair value gap. Sort of putting in a little head and shoulder setup here on the 1 minute time frame. Left shoulder, head, right shoulder. Neckline being right here as we continue into that Asia sell side. So now we filled this bearish fair value gap, tapped midnight again. Closing here at the VWAP is going to be my exit. Giving me a hard time to exit this early. For 30, new 15-minute candle. Volume imbalance up, volume imbalance down. Interesting. After retracing into the only 15-minute bearish fair value gap. Potentially forming that head and shoulder setup if we would flip the chart on its head. Well, we would also kind of be looking for upside, which would mean downside on the non-inverted chart. 1 minute time frame. Still holding in this unfilled volume imbalance, so I'm going to wait for the close below to get out. But at the same time, it's only 2.5 points into the Asia sell side. Well, I mean, it could continue lower, but we're already starting to move more sideways than up or down. So yeah, actually that sell side sweep could be that last manipulation, and then we reverse. So I'm not looking for continued shorts here. Could look at the entire daily range and see if that helps us and gives us more insight. 50%. We're still in a premium, so this would be sell side and discount actually. Well, knowing that might actually not be the worst area to go short in. But as long as we hold this unfilled volume imbalance here on the 1 minute, I'm not gonna get out just yet. But so far still respecting bearish fair value gaps, filling in bullish gaps, closing them back in. Come on, would you close below that volume imbalance, please? Nope. Tedious. New 5-minute candle, still holding support on the VWAP here. Still SMT divergence between ES and NQ. Yep. NQ also bouncing off the midnight level. Well, until I get the invalidation, I'm gonna remain in. Otherwise, safety stop loss, which would account to a loss of 125. Yeah, 125 on a 50k. In terms of total risk, I think I'm in with one lot. 2.5 points, one lot. Yeah, something around that. I think I'm right now at that point in time where I'm holding on to that long bias almost too strong. I don't know. That's what my gut feeling tells me. That's why I'm already out with 50%. And I'm just waiting for the invalidation here of this volume imbalance, which I could be getting now. But yeah, as you can see, we're just going sideways alongside the VWAP. The head and shoulder setup. If I would have seen that 15-minute bearish fair value gap, I didn't see it early enough. I think I would have waited for a confirmation close above that one on the 5-minute time frame and 15 before actually going long. But I saw that too late. It's gonna go down to the journal. Didn't check the 15-minute or didn't anticipate there to actually be a fair value gap after orders. Slow and steady move down. Looked like everything has been delivered fairly on the 5-minute time frame, so I assumed that, yeah, it's also gonna be same scenario on the 15-minute, but it wasn't, and we retraced into that inefficiency at the beginning of the new hourly candle. New 15-minute candle in 6 minutes. Oh, I think that's sell side. Would be likely, and potentially even lower prices, but I wait for that confirmation. And so far, I didn't get it yet because we're still inside this unfilled volume imbalance, and we could still use it to deliver back into this equal high buy side, close above the 50%, above the 15-minute bearish fair value gap. And like I said, I don't blow up on the account. It's a very calculated risk that I'm taking on here. 50 seconds to go. Let's see what that last 1-minute candle does here onto the 5-minute time frame. I would prefer a close back above the midnight level. Five, four, three, two, one. New candle. Still within the volume imbalance. Like I said, stop loss is placed. Quickly gonna go to the toilet. Be back in no time. Yeah, quickly hit my stop loss. Oh, these fucking slow London sessions. Sometimes, I mean, it's a love-hate relationship. I enjoy slow price action because it gives you much more time to think and reevaluate, but also more time to think isn't always a good thing. I really have to say my best trades are mostly based on intuition, where I do not spend too much time about thinking what I'm actually doing. Simply taking it and boom, done. Volume imbalance right here. Just seeing that volume imbalance right here. Kept holding support on that volume imbalance, close below, retest, and then we headed lower. Volume imbalance, retest, and now we might be heading lower. Let's check out the 1 minute time frame. We opened below here, so I'm ready to take that exit if we eventually get it now. We close below. I'm out of the long. But now we have a unfilled volume imbalance right here. It's right around the VWAP midnight level, that lowest bullish fair value gap that we had right here. Let's wait for this candle to close and see what we get. Already mark up this trade and get out of mm, 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 mm. Very tedious. Let's see, make sure I move my take profit target. I actually jumped in on a quick short here. If it's not long, it's 99% out of the time when I'm taking a trade exactly the opposite. So I got out on this one right here on this candle close completely. Took an early exit already on this candle close. We had sell side liquidity, noise. Gonna take a partial here. Leaving 50% to run. That's most of the time the hardest thing to me, or for most traders if they are long. Your mind always plays a little game with you, trying to fool you into only looking for anything that would confirm that long setup, and then actually changing that very quickly after after being glued to one specific bias. It takes a while to develop. I already took a partial here at 1-to-1, put my stop just above the midnight level. Now it's above the candle's high. Let me actually, come on, trades. Grab a short position tool. Where did I go short? Right here. See if we can hit that Asia sell side. Stops at break even. We hit that sell side now, and Q should have done that same thing. Let's see if that overall head and shoulder setup of our 15-minute bearish fair value gap that we recognized a little bit later plays out. Of course, you could have also gotten in on here, but I don't know, going with the flow, I'm already at break even from taking a small loss here. And the stop is also at break even, so there's nothing at risk. Letting this potentially run. It's 4:45, entering the 5 a.m. macro now. We're inside this 1 hour bullish volume imbalance where we ended up holding support 1, 2, 3, 4 times. Now we closed right at the low. We didn't close below it yet. Let me mark this out as a partial. Make this green. Partial exit. In this way, I can go back through all my trades on the weekend and actually see what I could do better in terms of my risk management, instead of reading through my handwritten notes or simply looking into a trading journal software and doing all the extra work if I already have it here on my chart. All those lines, they go into the trades folder right here. This long position goes into here as well. Trend line, that's all Tuesday, and we put it into the specific folder. Now everything's cleaned up. If I want to look at only my trades, I see only my trades with some notes. Can really recommend doing that. So let's actually see how much I ended up losing here. 94. No. Minus $94, and on the other account minus 198. All right, let's leave that on here. Tuesday, right now being in that short. And very similar to what we already spoke about, this bearish fair value gap. Was it here? No, this one where we close above, but immediately volume imbalance back inside of it. That's a gray area. I don't consider it as actually closing above. Therefore I also want to see the open above it. And that's that real good sign that we actually going to continue higher. So if you would have wanted to play, for example, this inversion fair value gap into buy side continuation, I would have waited for an opening above this fair value gap right here. And very similar to what we saw here. Yes, we closed, like I said, above our initial bullish fair value gap and then inversion fair value gap, but we immediately volume imbalanced back inside of it after having tested the 15-minute bearish right here. We come back to retest it again and leave behind a pin bar. That was my first partial exit right here. Then, yeah, we bounced, and on a 1 minute time frame, it looked like we could actually continue higher here. But then we used this volume imbalance as actual resistance with this older one to continue lower. And right here on this candle, I took my final exit before any of my safety stops have been triggered on the very next candle. Actually, simply flipping my long into a short, taking 50% off once we hit that sell side, just looking for a quick compensation of this little loss right here. Because most of the times if I'm wrong about the direction, simply doing the opposite of what I was wrong about, actually ends up happening sooner or later. So now we close below sell side and below the volume imbalance, leaving behind a new bearish fair value gap. I'm gonna keep track of that. Bearish fair value gap right here. Reference this volume imbalance here. A 15-minute fair value gap. Tidy everything up a little. Let's see where my take profit is at. I want to put it to the Asia session low, which would be right here. I'm just going to do that manually. So now that we actually close below and we don't have any inefficiencies on this entire leg to the upside, this could actually end up being that low resistance liquidity run into more sell side. We'll see. We have bearish fair value gaps to invalidate that bias. So if we return back into them and close above, I would actually be looking for the reversal back into short-term highs and equal high buy side. But until that happens, I anticipate order flow to continue further to the downside. The time is 4:55, so we're gonna get a new hourly candle on the next candle. We have a hourly time frame bullish fair value gap right here where we could potentially hold support, while at the same time just having shifted market structure. So we just tapped the high of this bullish fair value gap right here. We also inversion fair value gap here from yesterday. We'll see. We get our confirmations early enough. We also don't have anything here on a 15-minute time frame. And this is the beginning of the 1 hour right here from 9 p.m. until 8 p.m. that hourly inefficiency. We could be drawing this in or simply use the ICT all-in-one and display power of 3 and then turn on the 1 hour time frame. Yep. And we would see that same thing right here. That's the hourly bullish fair value gap that we're working with. I forgot turning that on. I don't know why I actually turned it off. So overall, at the beginning of this new hourly candle, I think I mentioned that it looks interesting that we move up first before taking sell side. I faded my bias a little bit. So yeah, totally admitting that by going long, but also managing my risk nicely, getting out early, and then also flipping my short-term scalp bias again to actually participate on the shorts into sell-side liquidity. So I think even though we look forward to see the overall head and shoulder setup play out, I missed spotting the 15-minute inefficiency, which would have been really nice confluence here actually. Then while being in long, this would have been a nice opportunity to get in the short a little bit earlier, but well, I mean, profit is profit. Beginning of the new hourly candle, move to the upside. Rest of the hourly candle, move to the downside. So let's see what we're going to get with the new hourly candle. We did something very similar here. New hourly candle opened up, pushed to the upside for the first 30 minutes really, or 15 minutes. After that, all we did was go sideways until the new hourly candle continued going sideways, and for the remainder right after 3:30 a.m. we continued to drop. That's how you can use higher time frame concepts on lower time frames. Sometimes we get the super explosive candles that just shoot up on a hourly time frame, but most of the time during London that's a really good approach. Open up with a hourly bullish volume imbalance here. See that? Shifted structure on the hourly if we're being really specific here. Higher high, short-term low, higher low, higher high, close below the most recent higher low. That would be the 1 hour market structure shift. Inside the range right here, not external, that's all internal. So I would put less weight on it actually. You want to see that stuff happening at the extremes of the range, but that's really rare on the 1 hour time frame. Mm, 1 hour fair value gap. Now, because it comes from a higher time frame, we make it gray. So now we actually tapped inside of it. That's not a good partial point. Take another 20% off the trade. Mm, 0.3. Nice, we push through it. Let's see if we hit that Asia sell side final target. Ready to close another big portion of the trade. Once we tap that, check out NQ. NQ is also doing that now. So even though we've been wrong on the long, doesn't mean that, well, it depends on how easy of a time you have to actually switch your bias. And that develops over time, I'd say. Nah, missed sell side by 1 tick, come on. if we look at the volume profile, even if we take out sell side, we could continue much lower because there's not going to be enough volume or enough traders to protect their positions here. Really, if we look at it, barely any volume compared to what we did right here. After failing to hold the volume point of control, we actually had it lower. But very similar, this is the new hour opening. So what could we anticipate here? Well, for the first 5, 15, 30 minutes, so that first half hour, first 15 minutes of the new hourly candle, we could see that continuation lower. And then something changes around here and we push to the upside. It happens most of the time every hour, especially after taking sell side. We did the same thing here. We pushed to the upside first 15, 30 minutes, retrace into an inefficiency, and then for the remainder of the hourly candle, move the opposite way. Right here, we push to the upside first 15 minutes, consolidate, trap traders, new hour opens up, keeps on consolidating, and we continue lower for the remainder of the new hourly candle. Man, I wish I would have knew that when I started trading. That would have been nice. Did we hit the Asia session low on the CFD chart? This week low? No, we did not yet. Close on the 50% of the hourly. I like to use the 1 hour time frame compared to the 4 hour time frame because the 4 hour time frame, for my trading style, it's just too fucking slow. The 1 hour time frame, well, 1 hour goes by relatively quick and you get frequent updates even within our session. 15-minute time frame works as well, but I like to have some sort of a higher time frame on my chart for Confluence. Like we did it yesterday during the AM session with the hourly bullish fair value gap here over from the left. We closed below it, had the final manipulation below it, and then moved to the upside. And that rough area is where we look for these things to take place on the lower time frame. That market structure shift at the low of the day paired with the bullish fair value gap for the reversal back up. Even though I got out at the VWAP at a 1 to 1.5 risk reward, happy that I actually done that. And then re-entering right up here, targeting the regular trading hours fill right here, the bearish fair value gap. Perfect. That's why I like to use the 1 hour time frame. At least the fair value gaps. Looking forward to see Asia sell side hit, if I'm being honest. Let's see, today, minus 23. History today, minus 65. If I close now, I would, no. Check out the 1 minute time frame starting to go sideways here, just below sell side. We have this unfilled volume imbalance, so eventually I think, we're gonna get back to this area. It's always a good idea to be aware of unfilled volume imbalances where they are. Of course, you can differentiate between a 1 hour unfilled volume imbalance and a 5 minute unfilled volume imbalance. Right here we have another one of those unfilled volume imbalances. But if you spot them on the 1 hour time frame, a good example would have been last week. This one right here, where I anticipated the shorts during this entire Tuesday choppy session where we actually did the drop at 4 p.m. So very late in the session, I was eyeing this unfilled hourly volume imbalance the entire day, and we get there eventually with that new day opening gap. That was a real bummer. On NQ, we actually delivered into that volume imbalance, or into that area on NQ. Volley S was just chopping around here. That was a real bummer, but it is what it is. Are there any questions, guys? I mean, I haven't received a new message. We still have 6 people watching. Just drop it in the chat. I think it's funny how I developed as a trader from a pure pattern trader to a go with the flow, full on price action style. Time and price is what I think is most important. Knowing what time it is, especially while scalping the lower time frames. SMC Dungeon, every time I see you, I have to think about that Hydra guy. I mean, he's doing a great job. Definitely combining time and price with his macros. But, yeah, well. Just my personal opinion. On that, let's see. Unfortunately, no volume imbalance. Let's see if we get that drop into the Asia sell side now. Having closed at the low of the hourly fair value gap. Immediate rebalance, so we did not leave behind a new bearish fair value gap right here to retrace into. We had this drop. Retested that previous candle's low, continuing lower. But yeah, really just going sideways here within a 1 point range. Yesterday I had a little chat with a trader friend of mine where we talked about algo and things like that. And I don't know, we got to the point where we agreed that, I don't know, I'm sure there's a automated system behind price action. I mean, otherwise we wouldn't spot the same kind of delivery over and over again. But you could also argue that retail traders tend to do the same thing over and over again in terms of stop loss placement, in terms of entry and exits, which would kind of, yeah, be the algo itself, because retail traders tend to repeat the same pattern, and that's why the algo or the price delivery that we consider being delivered by a top secret algorithm that's controlling the market. You could also argue that this price delivery / top secret trading algorithm could just be a effect of retail traders trading very similarly, if you know what I mean. Does that make sense? Let me know in the chat. Because retail traders, they jump in here looking for higher prices, and of course we don't know, we can't actually look inside of the retail trader's mind unless we take a look into our own mind most of the times. But yeah, so it could either be retail traders just doing some random stuff and an algo delivering price, or that price delivery that we call the algorithm based on what ICT teaches is just a side effect of retail traders doing the same stuff over and over again. just a natural byproduct within time and price of what traders do. Yeah, I don't know. Still think there's an algorithm. Not gonna change my opinion about that, but could also be open-minded and argue for the exact opposite. We'll never know exactly. I mean, otherwise we couldn't simply be using a little... I mean, what did we do so far today? If we look at trade executions, let's bring them up here. Trades. Close below the highest bullish fair value gap, and whoop, we retest the VWAP. 1-to-1 risk to reward. We continue to push up. It started to leave behind some hints, but it really just faded me here. Looking for that long, but I immediately saw the invalidations and scaled out of my position, being aware that I'm wrong about the direction, and if I'm wrong about my direction, it 90% of the time means we're gonna smack down into, yeah, the opposite direction, and that's exactly what happened here. New 15-minute time frame candle. Let's see. Closing right here at the slow. This could deliver that final momentum to the Asia sell side liquidity pool. Come on, fella. Come on. Unfilled volume imbalance. Could also mark that out. Still in with 25% of my original position size. And we just hit that Asia sell side target with that new 15-minute candle. Nice, nice, nice. Let me actually see and pull up the trades. Put that into Tuesday trades. A little bit of a text to it afterwards. All right, I think I would call it a successful London session live stream. What do you think was the best opportunity? What place did you actually take yourself, if you even engaged on today's price action? I mean, yeah. We just looked at my trades right here. We started looking for the shorts once we saw the close below the highest bearish value gap. For the 1-to-1 risk to reward right here. Got our bounce around the VWAP area. Spoofed me, or spoofed my, yeah. Looking for the long. I don't think it was invalid to look for the long. Otherwise, well, I think we had that confluence with the SMT divergence. The only thing, like Omar said, is that if I'm afraid of taking long without having taken the sell side liquidity, this was that only, yeah, potential risk on taking this long, but we were aware of it. And then we immediately started to, okay, close above, volume imbalance back inside, not hold support on the midnight, neither on this volume imbalance, and then actually using it as resistance, continuing lower. This should have been the exit instead of this candle because we closed below the 50%. But at this point in time, I was still looking for this 1 minute volume imbalance there to fail holding support. So I got out right here, immediately jumping into the short. Actually, a pretty good risk to reward trade. Would have been even better if I used the risk management tool. Right here, in terms of risk to reward, that's a 3-to-1 risk to reward. That's not bad, but I ended up with a 1.5 because I didn't end up, well, still a 3-to-1 risk to reward, but I didn't use the appropriate amount of lots. If we compare the stop loss 2.5 points to the stop loss 1.5 points, I should have used at least twice the amount of lots on this short given on the smaller stop loss to make the same amount of profit. You know what I mean. But I think, yeah, I don't know, I just don't like having to switch between MT5 and TradingView the whole time and then looking for the risk management tool, placing the trade on both accounts. Sometimes you just don't have the time. I mean, here we barely had a couple of seconds to get in on that, and then switching, positioning and moving your stop loss around, setting your take profit target and all that stuff, and then executing, and then also moving over to that second account. I mean, yeah, it can work sometimes, but yeah, during the New York session, price would simply just smash into that sell side and don't even give you the opportunity. And that's why I think if I'm not doing it during the New York session, why even bother doing it during London? So my TP was triggered here. We open with another bearish volume imbalance. Like we said, I would be cautious with the continuation short from here. We've been moving lower for the first 20 minutes now of this new hourly candle. If we actually end up sweeping here, maybe hitting this unfilled volume imbalance, we could see a short-term retracement. If we look on the 15-minute time frame, we have a nice 15-minute bearish fair value gap here before we potentially even continue lower. But I think I'm gonna leave it at that. Do some more journaling. Check the chat here. Married to the long. Exactly. That's the hardest point. If you're long, or if you're in one position most of the time, you're glued to it. All you see is, okay, this could still somehow continue higher. So some sort of a live example, here with myself and my own analysis. But I think I managed it very well, taking the first exit right here, the second exit right here, and then immediately, if it's not long, well, most of the time it's short unless we continue to consolidate. That 15-minute fair value gap, like you said, would have been that confirmation. But yeah, I still prefer, instead of blindly trusting that confirmation and placing a short order there, wait for a reaction on lower time frame, my execution time frame, and this candle right here with the wick to the upside, no wick to the downside, a nice pin bar, even with a gap back below the midnight level, would have been that confirmation, really. So instead of course, lower risk to reward ratio, but I mean, if you look at this and take this trade, your stop loss would have been, I don't know, 15-minute time frame at least above these highs, targeting that sell side, coming out at a 1.33 risk to reward ratio, getting in here, placing your stop one tick above, almost the same risk to reward, while having a little bit of extra confidence instead of, let's sell here. Because at that point in time, we could have already been in that bullish order flow, pin bar to the upside, huge wick to the downside, no wick to the upside, opening with a bullish gap. That was my initial entry into the long trade, being back above the midnight level, bouncing off the VWAP, seeing that lower time frame bullish order flow here. Unfortunately, it failed. That's what I used as an exit to get in on the short. A nice London session in terms of price action, I think. The only thing that we saw was short during London. I mean, we opened up, consolidated for a little while, pretty boring. Got in short for the first time here, taking our points. Well, I would still argue that taking this long was valid, of course. We have to manage our risk well. So it doesn't end up as a YOLO trade. Yeah, I don't know. I enjoyed this London session live stream. It's a lot more calm for me to stream during London. I'm gonna do these eventually, a couple of times per week. Depending on how much time I have myself. I've read a couple of messages that you really enjoy London session live streams, and that's a pleasant surprise. Let's see, this is 20, now 25. Yeah, this session was really, really nice, yeah. Also, being on stream keeps me yeah, how do I say that? Keeps me on track. So I enjoy it too. Sell side liquidity taken. Exit. Then bottom left. Let's that up. As we're starting to, yeah, flatten out here, I don't know. Definitely would make sure to take some partials here at that Asia sell side liquidity level. Open up with a bearish gap again, retesting the hourly inversion fair value gap now. We're at almost at the halfway mark of the new hourly candle. I wouldn't be surprised if for the remainder of the next 30 minutes we actually continue to retrace. And there goes the continuation. So now we've hit that lowest volume imbalance unfilled. Let's see if we can push through it. We have another fair value gap down here, which hasn't been traded into. And our current low of the day. I'm now out with 100% of my total position size. Bullish fair value gap, volume imbalance, low of day, sell side liquidity. Sell side. That one has been closed in. Now going sideways, dropping. I don't know. I still have that feeling that Eventually we're gonna bounce off here, just based on the timing of this hourly candle. Of course, unless we simply get a hourly time frame candle without any retracement, and this is just a direction that we want to continue with for the remainder of this hourly candle. Boom, into sell side, potentially back into the low. Let's take a last look at NQ here. NQ also inside a hourly bullish fair value gap now. Let's look at the hourly time frame itself. Yeah, I would still look forward for the SPY side to be taken eventually. We're now inside the only 1 hour bullish fair value gap, or about to test it right here. Given this, looking at this as a retracement to continue higher, since Asia already pushed to the upside, retest the 50%, hit the fair value gap. Instead of simply running up and taking the SPY side, we already hit our reversal area where probability of looking for longs, yeah, well, for a continuation setup would be the worst type of idea you could possibly have in my eyes, above the 3.5 standard deviation target from the initiation of the move right here at the opening of the day. Now we're retracing, trapping shorts before, yeah, once those shorts are trapped, pushing back up into buy side, because then market makers can make money with all the shorts that are still trapped in the market here while moving to the upside, instead of simply moving it straight to the upside. Whose money are they going to take? Who's still short after yesterday's reversal? So, well, get out a few of the late Asia session, early London session long positions right here. Of course, I could be completely wrong, and we are not gonna take out the previous day, previous week's high. I still think it's gonna happen. I mean, look at all this buy side liquidity here in close proximity here, after negating more movement to the downside, at least for the first couple of days this week. Keep in mind, later at 10 a.m. we also have some high impact news for us to check out. So the next trade that I will be taking likely will happen post 10 a.m. news on the New York session live stream. Alright guys, but that's gonna be it for me. It's 5:30 now. 11:30. Gotta do some other stuff, go to the gym, and yeah, be back for the New York session live stream. Alright guys, take care. Thanks for joining this London session tape read live stream this time. I will upload the recording to YouTube for anyone that missed that. So yeah, take care and enjoy your lunch break. We'll be back during New York. Bye.